Good day. My name is Charene Nortier and I'm from the Conduct of Business Supervision Division at the FAIS. We are busy with a series of webinars under the topic of competence, and this webinar is the third in our series of 4 webinars. In this webinar, we are specifically looking at services under supervision, and with me is Stefanie Rossouw to discuss this very important topic. Stefanie, thank you for joining me for another webinar in this series.
Thank you very much, Charene. As Charene said, this is part 2, or basically it's our third video, but we've broken it up into 3 parts, and this is part 2 where we're going to be talking about services under supervision. This exemption notice is important because it affects all representatives that are appointed in the industry who does not comply with the competence requirements yet, and it gives them an opportunity to work under supervision while they gain the experience, obtain a qualification, and meet all the other competence requirements. I've included a link for you for ease of reference if you would like to access the Board Notice 86, the exemption of services under supervision. So the exemption of services under supervision, as I said, is to allow people into the industry and not to create any barrier to entry. So if you have not completed a recognized qualification, or you don't have any product experience, rendering financial services in respect of a category or a subcategory, then you can be appointed under supervision while you gain the experience and while you obtain a qualification and meet the competence requirements. So it's there to support representatives, but also bearing in mind that we need to protect our clients. So it's making sure that they work under supervision and to ensure that they don't negatively affect a client or the FSP or put the FSP at risk. So it also allows sufficient time that you can work under supervision, because there is a maximum period of 6 years. So you can't work under supervision for longer than 6 years, but it's important to understand that it is enough time for you to meet the competence requirements while working under supervision. I want to highlight that you cannot work under supervision for product-specific training. This training you need to complete before you can even be appointed under supervision and before you can render any service under supervision. So it's important to understand that product-specific training is excluded from services under supervision. The services under supervision exemption provides the exemption for representatives subject to 7 conditions. There are 7 conditions that you have to meet and continue to meet in order to qualify for the exemption. Should you not meet any of these conditions, then you no longer qualify for the exemption and you would be in breach of the legislation. The first condition is the entry-level requirement. You can appoint a representative under supervision in Category 1 and Category 4 with a Grade 12 national certificate or an equivalent. So that's the entry-level requirement to be appointed under supervision. For Category 1, where you only render execution of sales in terms of a Tier 1 product, you require a Grade 10 or an equivalent. In Category 1, where the representative is appointed for subcategory 1.1 and 1.19 only, that's funeral policies and friendly society benefits, these representatives are excluded from the entry-level requirement. And then Category 2, 2A and 3 must have a recognized qualification at a degree level. In one of our previous webinars, we did refer to the list of recognized qualifications and how to apply to get your qualification onto that list and what criteria we apply to approve that application. So the representatives in Category 2, 2A and 3 require a qualification at the degree level and the qualification must be on the list of recognized qualifications. So condition 2 referred to specific compliance periods. So you are required to meet specific competence requirements within specific periods in order to comply with condition 2 of the exemption notice. So you have to comply with experience, qualification, regulatory exam, class of business, and continuous professional development. So it sets out very clearly what the timelines are in terms of meeting those deadlines for the different requirements so that you can continue to qualify for this exemption. So the first one is your experience. If you want to see how much experience you need in terms of your product category, you can refer to Board Notice 194 of 2017. That's our the determination of fit and proper requirements for financial services providers, and you will find the table that nicely sets out the experience requirements per product category. You will find that in Annexure 1 in Table 1 and 2. So you can refer there, go and look up the products that you are appointed for, and then go and see how much experience do you need. The more you will require more experience for more complex products because the risk is higher, so you need more experience in terms of those products. Your experience has to be assessed at the end of your supervision period and must be signed off by your supervisor. If you are appointed for more than one product category at a time, say for example 5 different product categories, you can gain experience concurrently. So you can gain the experience from the time that you're appointed for each of those products, and it can run concurrently. You don't have to do it individually. And like I said, the experience starts from the date of first appointment for the particular product category. Then your qualification, you have a maximum of 6 years, which is quite a reasonable period in which to complete a qualification. So you have a maximum of 6 years in which to complete a qualification from the list of recognized qualifications. The representatives appointed exclusively for subcategory 1.1 and 1.19, funeral policies and friendly society benefits are excluded from the qualification requirements. And the qualification that you enroll for must be a recognized qualification from the list of recognized qualifications. So there's a lot to choose from. Some of them, it doesn't have to be a degree, it can be a certificate. It depends on what products you deal with and in which category you fall. Then your regulatory examination. What's important here is to remember that the timeline for a regulatory examination commences when you are appointed as a representative. So it's not linked to a product category, it's linked to when you were appointed as a representative. So the 2-year period that you have to comply with the regulatory examination, the clock starts ticking from the time that you're appointed. So it's no longer linked to any financial product, and it applies to category 1 representatives who are appointed in terms of tier 1 products for advice and intermediary services, and then category 2, 2A, 3, and category 4. So all of these representatives must comply with the regulatory exam requirement. And then there's class of business. You have 12 months in which to complete your class of business from the time that you're appointed under supervision. And then your continuous professional development only becomes due when either you have met the qualification, regulatory exam, and class of business requirement, then you need to do CPD, or once you have been under supervision for the maximum period of 6 years, then you need to do CPD, whichever one comes first. CPD applies to representatives in category 1 for tier 1 products, advice, and intermediary services, category 2, 2A3, and category 4. So that is the second condition. You have to comply with the timelines as stipulated in the exemption notice. Then, what is also important to note is that I just referred to the fact that if you comply with the qualification, regulatory exam, and class of business requirement, then CPD becomes due. But it could be that the date on which you have met these requirements and you now have to do CPD does not coincide with the CPD cycle that runs over a period of 12 months, starting on 1 June and ending on 31 May of the following year. So if it happens that your compliance date, it does not coincide with that cycle, then you can calculate the CPD hours that you need to meet prorated. So let's look at the formula that you need to use in order to do this calculation. This formula is also included in the exemption notice. So basically, I'm going to give you an example. If, for example, John Doe is a supervised representative appointed for more than one subclass of business within a single class of business and must therefore complete a minimum of 12 hours of CPD per CPD cycle. This requirement you will find in the Determination of Fit and Proper Requirements, Board Notice 194 of 2017, in Part 4 of that Board Notice, where it discusses the CPD requirements in detail. So you will find the CPD requirements in that section of the Determination of Fit and Proper Requirements. So, say for example, John Doe must complete 12 hours of CPD based on the products that he's appointed for. Then the regulatory, then the number of annual CPD hours required would be 12 hours. The number of months left from the time that he complied with the competence requirements until the end of the CPD cycle is 6 months. That's an example. So how will you calculate it? You will take your 12 hours of CPD that you require, divide it by 12, and then times it with the number of months that is left in the CPD cycle. So in this case, it was six months. So he has six CPD hours that he would need to complete within that cycle. The third condition is your supervision agreement. Now, the supervision agreement is the foundation of your supervision period. That supervision agreement is the only official record you have to really explain what has happened within that supervision period. It has to clarify specific issues in that agreement to ensure that you comply with this condition and continue to qualify for the exemption. So it's very important that FSPs review their supervision agreements at regular intervals to ensure that all the supervision agreements comply with this condition. So in the written supervision agreement, you have to identify the supervisor. So the supervisor must be stated clearly in the supervision agreement. The tasks and functions that must be performed by the supervised representative must be clearly listed and identified in the supervision agreement. The knowledge, the skills, and the expertise that is required by that representative working under supervision must also be listed and identified. The training needs and the training program to achieve the training outcomes must also be identified in that supervision agreement. So you can clearly see that your supervised representative will know exactly what will be expected from him or her when they enter into this agreement. There's no surprises, there's no grey areas. The supervision arrangement details, such as duties and responsibilities of both parties, the representative under supervision, as well as the supervisor, the supervision policies, the procedures, the monitoring and the assessment, all the activities related to this supervision agreement must be stipulated clearly and must be shared with the representative working under supervision. You also have to make provision for under what circumstances would the intensity of the supervision be reduced. So instead of me checking up on you every day in terms of your activities or more than once a day, now you can start working a little bit more independently, but you're still working under supervision. So what would that look like? That needs to be clarified in your supervision agreement. And when can the supervisor make that decision to say now we can reduce the intensity of the supervision? So it must be clearly stated. And then when and how the supervised representative will be assessed. That should also not come as a surprise to the representative working under supervision. And then lastly, your sign-off criteria. When will the supervisor sign off that you've completed your supervision? What milestones must be reached before that sign-off can happen? The FSP themselves also have specific duties to comply with. So if the FSP doesn't meet condition 4, then the exemption notice cannot apply. So firstly, the operational ability. The FSP must have the operational ability to support the services under supervision requirements. So it must have the human, technical and technological resources, controls, procedures, governance framework and monitoring mechanisms to actually make supervision work in practice, and to work to make the supervision arrangement work sufficiently so that these representatives are supervised adequately so that they don't pose any risk to the FSP or to clients. Ensure that the appointment does not materially increase the risk to the FSP or the fair treatment to the client. Very, very important. Ensure that the working relationship exists between the supervisor and the supervised representative. It will make no sense that the supervisor sitting in a completely different division or a business unit now have to supervise a representative in another area. It's not practical. So those kind of situations should be avoided. Review the effectiveness and the adequacy of the supervision arrangement. I mentioned that previously. The FSP is accountable to ensure that all supervision arrangements or agreements entered into is reviewed on a regular basis to make sure that they can be enforced and that they contain all the necessary information. Also ensure that the supervised representative actively pursue the completion of the class of business training, regulatory examinations, and recognized qualification within the prescribed time limits. So the FSP must have controls in place to ensure that this person, this representative working under supervision, enrolls for a qualification in time, that they do get support for preparing for the regulatory examination to pass the examination in time, to make sure that they monitor whether that representative is making progress towards achieving those specific outcomes. Then also reflect on the register of representatives, whether the person is working under supervision. So on the representative register that they will upload to the FSCA, to the central representative register, where the record is uploaded to show this is a representative appointed under supervision to render services in respect of these particular product subcategories. That services under supervision must be shown on that representative register so that the FSCA also can see if that representative is working under supervision and when the supervision period started and ended. So the condition, sorry, I want to see if I can make this a bit clearer for myself to see. Okay, so the supervisor must have adequate, appropriate and relevant skills, knowledge and expertise in relation of the same service, product and function. So this makes absolute sense. It's almost common sense that the person overseeing or supervising this representative must have the knowledge, skills and experience in terms of those categories and product categories that this representative is appointed for. You can't have a supervisor that's an investment expert, but they have to supervise a representative dealing with credit life or maybe short-term insurance. So it's completely different areas, and the supervisor must have the adequate skills and expertise to do the supervision properly. They also need to meet, the supervisor themselves need to meet the competence requirements. So that's also important. They must have coaching and assessment skills. You can't appoint a supervisor that doesn't have the skills to actually supervise and assess this person under supervision at regular intervals. And then the operational ability to monitor and supervise the representative working under supervision. So the operational ability is, can I contact the person? Can I check the person? Are we set up in such a way that I can actually see what this representative under supervision is doing and the kind of advice and the intermediary services rendered by the representative. Then the supervisor themselves have specific duties to comply with as well. They must monitor and coach in respect of financial services and products. So that's the duty of a supervisor. Review and assess at regular intervals and also record the observations, the things they note in terms of this representative working under supervision. So if you see that there's certain areas where they may be struggling or that needs more attention, it has to be recorded so that there's a complete full record of the findings of the supervisor. Where must more attention be given to, or what areas did the representative already achieve? So that's quite important to keep proper records. Then ensure compliance with the supervision agreement. The supervisor must ensure that when that supervision agreement was signed, that all the stipulations in that agreement is followed and implemented. And then if there's an incident or any occurrence where as a result of this representative working under supervision, a client was unfairly treated, it has to be reported to the FSP immediately. It shouldn't just be ignored, it should be noted and it should be reported so that action can be taken in that respect. Also, the record keeping from a supervisor point of view is very important. You have to keep the correct records. The FSCA can ask for the records when they do their monitoring and supervising of FSP, so it's important to document all the whole process from start to end. Yes, and then all the records, the training records, when certain coaching sessions took place, all of that information must be recorded by the supervisor. The representative himself or herself also has certain duties and responsibilities. They have to adhere to the provisions of the supervision agreement. So they need to understand the supervision agreement that they entered into and adhere to the stipulations in that agreement. They must actively pursue the completion of class of business training, the regulatory examination, and the qualification. So they can't sit back and say, okay, well, I'm not going to do anything. If the FSP and the supervisor is equipping them with all the means to actually comply with these requirements, then they need to actively pursue that and take the opportunity and do what is required of them. And then disclose to clients rendering financial service that they are rendering services under supervision. So they have to say, I'm working under supervision, and they need to make sure that the client knows that they are still being supervised. So then the intensity of the supervision, that's quite an important factor. When to make the decision that the intensity of the supervision can be decreased. So the FSP must determine the arrangements and intensity of supervision that must apply, and they have to consider the following: the nature, scale and complexity of the financial service and the financial product, in respect of what services are being rendered by this representative. So that's quite important. They need to look at the risk. The supervised representative assessed level of competency. So when the representative was assessed, what was the findings? What's the competency level, and can they, based on that, decrease the intensity of the supervision? And then obviously also the risk to the client and the FSP. So at regular intervals, this supervision must be reviewed to make sure the appropriateness, effectiveness and adequacy of the supervision arrangement and the level of the intensity. Is the level of intensity appropriate, taking into consideration the criteria that I've just mentioned, and then determine the criteria and procedures to assess whether it is appropriate for the supervised representative to work under reduced level of intensity. So it's not only the decision of the supervisor, the FSP must also make a decision in that regard and have clear guidelines in terms of when supervision can be reduced. Then the transitional requirements is quite an important factor. I want to spend a little bit more time on just explaining this. There was a board notice. The previous exemption for services under supervision was published previously. It's now repealed, but it was published previously in board notice 106 of 2008. Oh, sorry, it's 104 of 2008. And in that exemption notice, there were certain timelines provided for. So we had to assist representatives transitioning from that exemption into this exemption notice. So now there are certain technical things that you just need to pay a little bit attention to. So the exemption of services under supervision number 2, which is the current one, dated 2018, published in Board Notice 86 of 2018, came into effect on the 1st of February 2019. Okay, so that's when it came into effect. Now, the representatives appointed under supervision prior to 1 February 2019 must comply with a class of business training within 12 months. And the deadline there was 31 January 2020. So that deadline has passed and everybody should comply with that requirement by now. The representatives appointed under supervision on or after 1 December 2018 must have a supervision agreement in place as per the criteria set out in condition 3 by 1 March 2019. And the supervision agreement I'm referring to here is the one I just explained that needs to stipulate specific information in that agreement. So that supervision agreement must be in place by 1 March 2019. So by now, everybody should be complying with that requirement. Then representatives appointed under supervision before 1 December 2018 must have a supervision agreement in place as explained in condition 3 by 1 June 2019. So all of this should have been met by now. The next one that is actually still in process is this requirement. Representatives appointed under supervision prior to 1 February 2019 must comply with the regulatory examination requirement within 2 years of the date of appointment as a representative ending on 30 June. So this is quite tricky to get your head around. So let's just look at it clearly. If, for example, the 24-month period starts on the date of first appointment as a representative, so that's when the clock starts ticking. So it runs for 24 months, and if the end at that 24 months is not on 30 June, then it will default to 30 June at the end of the 24-month period. So let's look at an example. If Rep A was appointed on 15 April 2015, the 24 months will expire, to be technical, at midnight on the 14th of April 2017. But since the period must end on 30 June, the deadline will then default to 30 June 2017. So I hope that's clear. If Rep B was appointed on 16 September 2016, the 24-month period will expire at midnight on 15 September 2018, so that's a 24-month period later. But since the period must end on 30 June, his deadline will then default to 30 June 2019. So I hope that's clear. Then, on 1 February 2019, the 2008 exemption services under supervision was withdrawn. But like I explained, we had to make provision for those people that were working under supervision that actually had to be transitioned into the current exemption. So in terms of condition 2.3b of the exemption of services under supervision, number 2, or we just refer to it as the 2018 exemption of services under supervision, the period in which a representative working under supervision must complete the applicable regulatory examination continues to apply to representatives who was appointed to work under supervision prior to 1 February 2019. But, and here's the catch, but only for the financial products and categories of financial services for which they were working under supervision for. So let's take a practical example. That's the best way of explaining this. Now you need to bear with me. It gets a little bit technical. Rep X has a date of first appointment of 14 April 2018. So that appointment date is prior to 1 February 2019. In respect of, and this is an example, short-term insurance personal lines. He has a date of appointment in respect of retail pension benefits of 1 March 2019, but he was appointed for pension benefits after 1 February 2019. So the 24 months to complete the relevant regulatory examination from the date on which he was first appointed as a representative ends at midnight 13 August 2020. Now, in respect of the short-term insurance product, if you apply this transitional arrangements, then his due date for writing the exam in terms of short-term insurance would be 30 June 2021. Okay, that's when he needs to meet the regulatory examination requirement in order to continue rendering services in terms of short-term insurance. In respect of the financial product, retail pension benefits, that transitional arrangements do not apply, and the representative has 2 years from the date of first appointment as a representative to comply with the regulatory examination requirements. So in order to render financial services in respect of retail pension benefits, he has to pass the examination by 14 August 2020. If he did not do so, he cannot render financial services in respect of retail pension benefits after 14 August 2020 until such time that he has passed the exam. And I hope this is clear. Charene, you need to help me out. If you have any questions now, this is the time to ask.
Stefanie, it's a very technical explanation, and what is clear is that you actually have to sit and plot this on paper, and that paper can obviously be electronic as well. But if you don't write out the dates and then apply the periods to the specific dates and apply the transitional arrangements for the specific appointments, it's going to become quite difficult where a person has multiple appointments. And we know that this happens in the industry. People don't get appointed for all of the sub-products at the same time. They have various DOFA dates, and navigating the DOFA dates with the transitional requirements as well as just the normal services under supervision periods becomes quite complex per person. And that's why the record keeping per person is important, and it's important both for the FSP that employs them, but also for themselves as individuals.
Correct. I do have some good news though. By 30 June 2021, this transitional period would be over, it would be in the past. And then we can just calculate the 24 months or the 2-year period from the date of first appointment, and it's clean cut. But until then, we still have to do the calculations on paper as you suggested.
Well, all the best. And I hope that you also find that it is good news the way that Stefanie obviously does, because I think it will make her life a little bit less complicated. Stefanie, thank you very much for this. I think that this session on services under supervision was incredibly useful and valuable, and I hope that people will watch it again if they have to figure out how to apply services under supervision. Just a reminder, we have accredited this webinar for CPD purposes with the Financial Planning Institute. If you want to get your CPD recognition, then please register formally for this and access the assessment that is built into the registration links. And once you've completed the assessment successfully, you can then download and save your CPD certificate for your own records, but also so that you can provide it to your FSP for their competence register updates. We have one more webinar on this competence series, and I hope that you will also join us for that. Stefanie, thank you so much, and I'll see you at the next webinar.
Thank you, Charene.